The natural sellers in the market are miners who are selling to cover their interest expense, to cover their electricity bill, and for capital investment purposes. And right now they sell about 900 Bitcoin a day.
In the vast ocean of cryptocurrency discussions, few voices carry the weight of Michael Saylor, CEO of MicroStrategy. His insights into Bitcoin and its implications for the future of finance are not only enlightening but also profoundly influential. In this comprehensive summary, we'll unravel Saylor's recent discourse on Bitcoin's intrinsic value, its role as a store of wealth in the 21st century, and the significance of the Bitcoin halving event. Prepare to dive deep into the world of digital assets with one of its most articulate proponents. Saylor begins by painting a picture of Bitcoin's expansive network, highlighting the backing it receives from major corporations like BlackRock, Fidelity, and Coinbase. He emphasizes the sheer scale of this network, comprising millions of individuals, thousands of corporations, and substantial investments in infrastructure. At its core, Bitcoin represents a global movement towards digital money and capital, transcending geographical and institutional boundaries. Central to Saylor's thesis is the idea of Bitcoin as a decentralized, incorruptible digital bank. Unlike traditional financial institutions, Bitcoin operates on immutable software, free from the influence of governments or corporations. It offers a refuge for those seeking to preserve their wealth without relying on intermediaries prone to geopolitical or economic instability.
You start to study all the companies that have backed it, Block and Fidelity and Coinbase and MicroStrategy and BlackRock, And once you start to see all of these organizations that are supporting it, you realize that there's a network of hundreds of millions of people, thousands of corporations, gigawatts of electricity, tens of billions of dollars of computing data centers, and hundreds of billions of dollars have been invested in this network. And everybody has one thing in common. They believe in the idea of digital money and digital capital. The world's got $900 trillion of capital, of wealth in it. And most of that wealth, it's stored there for when you need it in the future. So if I give you a lot of money, you've got to decide to invest it in the stock market, in the real estate market, or buy debt, or put it in a bank. They all have risk. Bitcoin represents a bank in cyberspace run by incorruptible software. It's for people that don't want to be their own hedge fund. Why should you have to gamble on a stock to not lose your money? Why should you have to trust a bank? Maybe you trust your bank, but what about the bank in Lebanon that stole everybody's money and froze it and then devalued it? What bank are you supposed to trust in a war zone? What bank do you trust when the currency's collapsing, right? So the world needs a bank it can trust. It needs a property that is beyond the reach of a government, a corporation, an individual. Bitcoin represents that. I think the best way to think about money is there are three parts of money. There's a medium of exchange, a unit of account, and a store of value. Currencies are legal tender defined by a nation state. So the dollar is a currency in the US, and the peso is a currency in Argentina, and the real is a currency in Brazil. Currencies make good mediums of exchanges. And they will always be good mediums of exchanges wherever there's an effective government. So money itself trifurcates. There's 150 or 120 currencies that are mediums of exchange. There's maybe half a dozen units of account that really people care about. And then stores of value, there's the 20th century equity portfolios and property. Bitcoin is the strongest store of value in the 21st century. And when I look at strength, I consider the half-life of the money. And what I mean is half-life is, how long will your economic energy or your capital last? And if you take money, $1 million, and you buy pesos with it, and they're running a 40% inflation rate, the half-life of the money is 18 months. You'll lose half of the money in 18 months, and then the next half of the money in 3 years. And so you'll be down to 12% of your money in 4.5 years. The half-life of money of your economic energy in the dollar is about 10 years. because there's about a 7% monetary expansion rate. If you had the $1 million, it would be worth $500,000 in 10 years. If you actually look at Miami Beach real estate, an acre of land in Miami Beach was worth $10,000 in 1930. It's worth $10 million today. That means that it's 1,000 times as expensive. If you do the math quickly, that means that the monetary inflation rate is 7.5%, and that means the half-life of your capital in the US dollar for the last 100 years is 10 years. Every 10 years you get cut in half. Doesn't sound that bad, but over 100 years, that means your 0.1% of your money is left. So dollar is isn't really a good store of value. What about gold? Gold's half-life is 30 years. Every 30 years, you double the gold supply, under the best case. What about property? Well, then it's a function of, can you pay the tax? If you can buy land and you can afford the tax, actually, it'll keep going up, in value. It'll track that money supply. The value of Bitcoin is Bitcoin is the same thing as beachfront property in South Beach. It's like, there's only 96 blocks. No government can make more than that amount of beachfront. And that's why it goes up by a factor of 1,000. If the government could make more of it, if you could manufacture more, if a robot could make more, if an AI could make more, the price would plummet over 100 years. That's why it's cheap to buy boxed cereal. But it's very expensive to eat fish that's caught on a line by an individual or a hunter. Things that require a lot of labor are expensive.
Saylor breaks down the concept of money into three essential functions: medium of exchange, unit of account, and store of value. While traditional currencies excel in facilitating transactions, they often falter as stores of value due to inflationary pressures. Bitcoin, however, emerges as a robust store of value in the 21st century, boasting an immutable supply and unprecedented scarcity. Delving deeper, Saylor compares the half-life of various assets as a measure of their enduring value. Traditional currencies and even assets like gold exhibit significant depreciation over time, eroding the purchasing power of investors. In contrast, Bitcoin's fixed supply ensures its longevity, akin to prime real estate in a virtual city with finite space. A pivotal moment in Bitcoin's narrative is the halving event, which occurs approximately every 4 years. Saylor elucidates how this event reduces the rate at which new Bitcoin is created, effectively diminishing the available supply. Drawing parallels to a sudden reduction in oil production, he highlights the inevitable impact on price dynamics as demand outstrips a dwindling supply.
So Bitcoin, you could think of it as a city in cyberspace, 256 blocks across, 256 blocks long, 256 blocks high. There'll never be more than 21 million. 276 blocks is the right number. The cube root of 21 million is about 276. So if you imagine a city in cyberspace, 276 blocks on a cube, that is the immutable supply of that asset, and that's all there's ever going to be for 1,000 years, maybe for 10,000 years. Yeah. And so one day, all 8 billion people in the world want to live there. Maybe they don't live there physically, but they live there with their money, with their capital. And it's kind of like, if you could buy 3 acres of land in Palm Beach 100 years ago, and you could afford to keep it for 100 years, it'd be worth $300 million right now. But if you live in Nigeria, you can't buy the land, and you probably can't pay the tax. The advantage of Bitcoin is it's in cyberspace, so you don't have that same kind of property tax, and anybody anywhere in the world can buy it. And so it offers that immutable, immortal, scarce, desirable property for everybody in the world, and they can access it with nothing more than a mobile phone. The natural sellers in the market are miners who are selling to cover their interest expense, to cover their electricity bill, and for capital investment purposes. And right now they sell about 900 Bitcoin a day. That works out to be about $65 million a day. At the halving, it'll be only 450 Bitcoin a day, so 32 million a day of selling. The significance of the halving is it's kind of like if Warren Buffett said, I'm going to buy $9 billion of Bitcoin every year for the next 4 years, starting on April 20th. That's what the halving is. You can look at it as it's a natural demand for $35 million worth of Bitcoin a day, every day for the next 4 years. Or you could say Bitcoin is a market where there's $18 billion of supply available, and there's a demand that's more than that, but in a couple of days, there won't be 18 billion in supply, there'll be 9 billion in supply. So if I told you I was going to cut the production of oil in half in 2 weeks, you would think the price would go up. And so that's the significance of the halving. There's not going to be any more than the 450 Bitcoin available from natural sellers. The natural buyers are people that want to store their life savings. They want a store of value, and they're wanting to save their capital. And when they buy, they'll buy and hold it for a decade. Maybe they'll hold it forever, but they'll hold it for a long, long time. And a lot of them are coming into the market because of the approval of these spot ETFs right now.
Yeah.
So they're the buyers, the miners are the sellers. The supply demand is the demand is going to increase, the supply is going to decrease. The price will have to adjust to find marginal sellers that want to sell at a higher price.
Saylor concludes by dissecting the dynamics of Bitcoin's market, where natural sellers miners meet an expanding base of long-term investors seeking to preserve their wealth. With the advent of spot ETFs and growing institutional interest, the demand for Bitcoin is poised to surge, amplifying its role as a premier store of value in the digital age. As we navigate the complexities of modern finance, Michael Saylor's insights offer a beacon of clarity in understanding the transformative potential of Bitcoin. From its inception as a digital currency to its evolution into a global reserve asset, Bitcoin continues to redefine the boundaries of economic sovereignty. Join us on this journey towards financial empowerment, guided by the wisdom of one of Bitcoin's foremost advocates. Please like and subscribe my channel.